Hello and welcome to our Coffee and Consulting at your desk from Convenus. My name is Friederike Ruch and I'm happy to welcome you to today's event. I hope you all grabbed already your coffee and you started well in the day so that we can see that wherever you work, the payday is not a risk day. Today we will look at the matter whether or what the payroll requirements are for foreign employees in Switzerland, which is actually quite an important topic. And unfortunately, there are a couple of things which, if you not really look into in the details, then you may forget them or you just won't look at them. Before we start, on the right-hand side, you will find our slides from today, from today's event, so you can download them if you want. As well as on the right-hand side, which is actually a little bit more important, is the box where you can put down all your questions. And any question you have now to today's topic, if you write them down while the presentation is ongoing, then I will answer them after the presentation. If you will not have the time to write down the question, then you still can send us an email and we will afterwards then get back to you. So what are the risks and what is so complicated or important to know? The thing is, if you employ foreign employees in Switzerland, then there's always the thing that you need to run a good assessment of whether the compensation elements, benefits or expenses, in which country they are actually subject to social security and income tax. As it is not for sure or guaranteed that in case you employ the individual in Switzerland, that really every time just Swiss taxation or Swiss social security is applicable. And that has not really something to do because of our current COVID situation and people may work from a different country. That situation we had before as well. And you may have seen in the past, there was usually the hot topic was about the stock options and employee shares. In case an employee had worked already for the company abroad for a couple of years, had earned their stock options or employee shares, then moved at some point to Switzerland in the same company. The stock options he was holding still, and then in the end, in Switzerland, maybe he then just exercised the options. And then you had also to see what you do with the taxation, that you split that for all the various countries somebody has worked, as long as the stock options he was holding. So there we had that issue already. Where we also had already the issue was about work days in a different country. Now, it's not that whenever somebody is working in a different country, then for sure there are some tax or social security implications, but there are certain scenarios or certain situations where that is applicable. So at least to make in the end the payments and the deductions of social security and tax liability in the correct way, you will have to look at it and you have to assess in the end what the situation is. So two of the major parts are in the end to see where is somebody subject to social security liability, to make sure you then also deduct the correct contributions. as well as from a tax point of view, and that may differ. So you may have someone being subject to Social Security in one country and tax liability in a different country, so that both is correctly assessed. And then what you also might know already and is, or may have seen, that if there are benefits or expenses paid from abroad as well or in Switzerland, you have to look then whether they are then subject to Social Security or taxes. It's not that everything you pay out is you have to deduct Social Security or taxes. As well as if you have to deduct foreign Social Security contributions or foreign tax withholdings, then above all you have to look at the specific compensation element to see whether then in that country what the result is. On the right hand side you see a salary calculation as a sample from someone who has his home country in Germany and the host country is in Switzerland. His salary is splitted between home country and host country, and he is coming, or he's assigned from Germany to Switzerland and is therefore subject to taxation in Switzerland. You will see there the tax at source deduction from Basel-Land, and the Social Security you see in the part about home country, Social Security from Germany, which are the contributions in Germany. So he is subject to German Social Security contributions and taxation in Switzerland. The individual is assigned from Germany to Switzerland, working in Switzerland, also having taken up residence in Switzerland, but remaining in the Social Security system in Germany. And then you see in the lower part of the calculation, below gross salary taxable, there is then the tax at source, which is deducted, and then you see a cross up for pension fund. And this is something you need to consider in case somebody is or pays Social Security in a country where there is no pension fund at all. As it is in Germany, there is no pension fund contributions which is deducted, and therefore we need to have the cross up for calculating the correct tax at source amount. Because in our tax at source tariff, there is a deduction of all the Swiss Social Security contributions already, including the pension fund. Now, if somebody has not pension fund contributions, then we do need to have that additional cross up to be done so that we can, in the end, have the right tax at source. What you see is that it is a net salary which is guaranteed to the employee, and therefore the cross up for Social Security, the pension fund, as well as for taxes. You don't see a cross up for the Social Security contributions itself. The reason for it is that in Germany there's a ceiling for the Social Security contributions, and therefore there's nothing we need to do, as he is already subject to the highest contributions. If we now keep that sample in mind and then look at what kind of aspects do we have to see and realize and take care. In regard to compensation, we do have to maybe have a closer look about the base salary, the Swiss salary level, which is there indicated, and that has to do with if you assign somebody from abroad to Switzerland, then based on the expat audience, you will have to pay the salary level equivalent to someone who is working in Switzerland. And therefore, I'm sure you had a lot of times the situation that you had to pay an additional amount for the individual just in order that he meets the requirements. Child allowance is also something which is sometimes a bit tricky, even in Switzerland, if you look at the various different situations, like the employee is maybe living and working in canton, or working in canton A but living in canton B, and the spouse might also work, and then you have to see where or who is actually responsible to getting the child allowance. The other allowance you will have to look at whether there is anything which need to be deducted from a tax or social security point of view. You need to see whether you have agreements with the employee in gross or net. Sometimes we see that is even mixed in contracts, which might make it then quite difficult for running the payroll very correctly. Bonus, stock options, that is something which is for, if you look at foreign employees and the individual has already worked for your company just in a different country, then this sometimes is a bit tricky because you have to split up the taxation or social security in 2 or 3 different countries. Social security is just that our system is already quite comprehensive. And then if we have a foreigner coming to Switzerland to work, we also have then to look at whether there are foreign insurances, pension fund or social security to be deducted, or whether somebody is just subject to the Swiss system. And therefore, the Swiss applicable contributions have to be deducted. We have to also see about a social security treaty, which might comes into place, and then as well what kind of insurances or contributions are considered in the treaty, and we can exempt the individual if he is assigned to Switzerland from them, or we do have to add on additional contributions. In regard to taxes, I think the most difficult part is about the correct assessment in regard of the taxation itself, and then about the tax at source deduction to get it correctly done. There I see it tricky for international commuters sometimes to get the right tax tariff, for above all if the spouse is working as well, or whether you don't really know it, and there are a bit of difficult situations there. In case we have an assignee and the individual is tax equalized, then seeing about the hypothetical tax deduction, that you consider that in the right way, or in case then the individual has even a higher taxation in Switzerland as in the country as the hypothetical tax was, so the reimbursement of additional income tax to be considered in the right way. In Switzerland, we have at least the possibility to, at some point, to just finish it up, meaning that the system or the tax system in Switzerland can also be quite extensive, meaning if you file it, for example, for 2020, a tax return, and the individual has them left in 2020, Switzerland as well, it might only be in 22 or 23 where then the final tax bills are coming and the taxation is done. So if in the end there is still to be paid something in 22 or 23, instead of having to file then as well a complete new tax return, what you can do is just to cross it up at that in that month where you pay the income tax for the individual, and then have it done for good. So you don't have to file a complete tax return, and then it's an ongoing situation. What also in Switzerland, as a last point, is something we have to look in the, I would say, in the more recent days, a bit closer about the factual employer principle, and there that the tax authorities also are looking a bit closer on it, as they see they can actually get some taxes out of it in Switzerland. So if we look now, if we try now to put all these foreign local or foreign employees in certain categories, we start now with the ones with the easy way, I would say, the foreign local employees, meaning they are locally employed with a Swiss employer in Switzerland, work location is in Switzerland, residence in Switzerland. So the only thing is they are not Swiss nationals. Basically, for them, it's a standard process. If we look at the categories now, depending on the permit type, then we have basically 3 different categories. B&L permit people, for them it's quite easy done. There's only that you have to deduct the Swiss tax at source, whereas if the individual has a C permit, then you don't need to deduct the Swiss tax at source. The only thing, as said before, might be in case they had been working already for your company just in a different country, and they had from that country still stock options, employee shares, or a bonus entitlement, and there's a bonus payout now while they are in Switzerland, but it's also relating to the work being done abroad. Then that is a tricky thing, but the rest is more or less just straight forward. Also about the internships, which are usually you do a notification or a 4 months permit or a 6 months permit, depending on the length. If the individual is employed in Switzerland, then you just run a normal Swiss payroll, pay the Swiss compensation, and deduct the Social Security as well as the tax at source. So for them, it's, I would say, just really straightforward, nothing really to be worried. It's getting a bit complicated if we say still the individuals are employed at a Swiss company. Their work location now might be in Switzerland as well as abroad, in the home office, for example. And the residents, they have a residence abroad as well as in Switzerland. So we talk now about the category of the cross-border worker or the international weekly commuters. And for both of them, there is the situation that we have to see from a Social Security point of view whether they are really subject to Social Security here in Switzerland, or we have to consider the Social Security contributions in the residence country. And there you might remember the 25% rule, which we have, meaning that if, for example, the cross-border worker has his main residence in Germany, and he's working more than 25% in Germany and only the remaining, let's say 60% in Switzerland and 40% in Germany, then he's subject to German Social Security contributions, and not to Swiss ones. In that scenario, in the salary calculation you do, you will have to actually deduct then the German social security contributions. What you also then need to do is basically to see that you find somebody helping you, supporting you in getting the social security contributions correctly calculated as well as paid in Germany. The other thing is for those cross-border permits or cross-border workers where we have a G permit, that we see about the work days. If we stick to the sample of 40% working in Germany and 60% working in Switzerland, then basically only for those 60% in Switzerland, the Swiss taxes should be deducted, and the rest of it will be then paid and paid in Germany. Now with Germany, the individual just has to file a tax return and then gets an invoice for it and just has to pay it. For other countries, you need to see and check whether there are any withholding requirements on the employer side, or it can really be just transferred the work to the individual, to the employee, and he has to just take care of it. The same actually is for B&L permit holder, which are as international weekly commuters here, meaning that the family is also still residing abroad. And there we also have the same situation where we have to look a bit closer about the social security as well as about the taxation. And there, if those people have work days in the residence country, then the residence country has the right to tax them. The same is in case they go on business trips to whatever else country, then basically for those days on business trip, they are then subject to taxes in the residence country and not any longer in Switzerland. So there you have to look at it a bit closer. What we also recommend is for those people that you, at least in regard to the Swiss Social Security, get a confirmation every year from them that they have worked less than those 25% in their residence country, in order to make sure that from your side you've done really everything that you know the correct situation, and therefore be also able to deduct the correct social security contributions. In regard to taxes, we advise that you should actually get a calendar filled out by the employee, and that is also something which is helpful for the employee himself, because he might need it as well for his tax return. So that was the easiest part, I would say. If we now move to the topic of assignees and business travelers, we start with assignees. Like here, the employer is abroad. The employment or the employment relationship and employment contract is still with the foreign employer, but they are working now here in Switzerland and have their residence usually then also in Switzerland. And there you see, for example, from Japan, a Japanese guy has moved with his family to Switzerland, is still employed with the Japanese company, but working here in the Swiss legal entity. And we pay out a part of the salary in net, and then another part he gets still in Japan paid out. He is subject to Japanese social security contributions. And there you see that we've done a cross up for tax and social security, because he has net compensation guaranteed. So basically on everything we do need then to make the cross up. The Japanese social security contributions which we deducted are also subject to a ceiling. therefore we don't really need to take care there in regard to the cross-up. We only really need to look at the tax at source, which then has to kind of always calculate it anew as soon as you have some additional elements you have to look at. So from a payroll point of view, it's in most of the cases from assignees, you have in the end two payrolls you have to run. One is where you usually make the payout, and in the other country, you usually have a shadow payroll just for tax purposes or social security purposes. Now, in the sample we just looked at, there are two payrolls. There's one payroll in Japan, because there's a payout then, as well as there's a payroll in Switzerland, because here we do have also a payout to the employee. You may think that with those crossing up, it's quite complicated from a payroll perspective. That is true. However, it's easier in the end if you have a net guaranteed salary or net guaranteed compensation to the employee, because you can tell him what exactly he gets out of it. And every month you just have to pay him whatever you have agreed. And the assignee at least is happy because he knows exactly what kind of salary he will get and what kind of money he can count on. Whereas what you see in those situations, that usually the payroll every month there is something else you have to look at, and the gross amount is usually every month a different one. Here we just have wanted to show you two different salary calculations. One is a payslip from Germany and one is a payslip from the UK. So what makes it also difficult sometimes with those assignees is that in the end you need to understand the foreign payslip in order to get it correctly indicated in the Swiss payroll, because not everything which is then subject to social security or taxes abroad and is calculated in their way is actually done in Switzerland just the same way. There we see on the German payslip Sachbezug Kfz, which is basically the company car benefit, which we calculate in a complete different way as Germany does. So there you always will have two different, complete different numbers. And also if you look at the UK payslip, the overtime, which is in a lot of contracts in the UK, you will see that is paid on a monthly basis on top. Here in Switzerland, you usually will not find that. Also, the pay period is here now a monthly, but in the UK, you have sometimes that they pay on a weekly or bi-weekly basis, which then makes it difficult sometimes to put everything together. What we see in practice actually, where still a lot of companies or some companies still have to do a bit of work or see what kind of process they would like to take on, is for those business traveler. What we've seen is that the immigration authorities in Switzerland are quite, how shall I put it, communicative with the tax authorities. And due to that, you may have seen that you receive kind of questionnaires from the tax authorities about business travelers, where they ask you in the end a couple of questions which goes in the direction of whether you as the Swiss company are actually the factual employer of that individual or not. In the end there you have to answer the truth, and sometimes then there is a realization that actually a lot of those questions are answered with yes, and therefore a factual employer is given in Switzerland, which then triggers that the individual is subject to tax at source in Switzerland on the Swiss days spending in Switzerland. And if you have somebody with a 120 days permit in Switzerland, then that can get to quite a process in that regard. The same is for business travelers. It goes the same way. So basically, you will have then to have a kind of shadow payrolling here in Switzerland just to get the taxes correctly paid. The other thing is that in regard to Social Security, in case there is no treaty, then you also need to look at the Social Security contributions, which you might have then in addition to deduct from the salary abroad, one thing, as well as to pay and deduct here in Switzerland and calculate them correctly. So in the end, because there are a group of people which are constantly going back and forth, it's a lot of work in the end if somebody really triggers the case of having to pay in Switzerland taxes, as well as having to pay Social Security contributions. So the assessment as well of the Swiss equivalent salary is already a part of for business travelers, which is quite an extensive thing, just to see that you actually identify in the end the correct Swiss equivalent salary from an immigration point of view, which then leads to everything else. So one of the recommendations from our side is that definitely you should not, first of all, you should avoid, if ever possible, that the factual employer is in Switzerland, as well as to avoid, whenever possible, that no expenses or anything else will be paid in Switzerland, so that there is no taxation in Switzerland, because just paying the taxes in Switzerland, that is one thing which is already sometimes a bit difficult, because you have to understand the foreign payslip and then to translate it to the Swiss system correctly. But in addition, you have then the situation you pay in Switzerland taxes. You need to look that in the other country, in the home country, the employee is actually exempted from it or kind of get it accredited. And this is sometimes then a bit of a nightmare to get it correctly done. But if we consider everything and if we look at everything and review everything correctly, then definitely the payday is not a risk day. So in case you do have any questions now, I'm happy to answer them. I will give you a bit of more time going through now a bit of what you can see from us or expect from us in the next few weeks. The next Coffee and Consulting at Your Desk is on the 2nd of August. And the topic is about going back to usual business, meaning business trips to the US, what you have to look at and consider. And then from a seminar point of view, the next seminar is about as well payroll, shadow payroll, or payroll itself, and the different topics about tax and social security compliance. The seminar is held in German, but it's definitely something which is I think, quite helpful if somebody has to deal with the payroll aspects. And then our next webinar is on the 7th of, no, not true, on the 10th of August about tax compliance. And then on the 7th of September about the expat contracts and the correct formulation. And as well on the 13th of July about the Social Security compliance. We would be happy if we can actually see you at one of our next seminars or next events. Now, there we do have one question. The question is about whether for a business traveler we advise usually to run always a correct assessment for tax and social security. And we actually advise to do so. For maybe not for someone who's only coming now to Switzerland for 1 or 2 days, because there, just from a practical point of view, it might be a bit too much and too overloaded. However, if we usually say as soon as you actually have to get a work permit for the individual, then as well you should look at the social security topic as well as the tax topic. Before, I mean, that is usually then after, for the first 2 days you might maybe have not to do something, or for 8 days you don't have to do something from an immigration perspective. There you can definitely just leave it as it is. Unfortunately, or luckily, whatever, we don't have received any other questions. So I assume you know everything, and you can do your payroll in the correct and compliant way. So then the only thing which I can do now is to wish you a great day and a great week, and looking forward to see you in one of the next events from us. Thank you for joining.